Okay, today we want to consider the only strategy you need to succeed in Forex trading. The only strategy you need to succeed in Forex trading. Actually, there are several good strategies in the Forex market, several good strategies you can use to trade the Forex market. I have several strategies. As you are aware, in this YouTube channel, I've been sharing with you a lot of strategies, good, beautiful strategies that can help you to succeed. All right, so but today I just want to simplify things for you. Okay, I love simplifying things, and I just want to simplify things for you in your trading career. Okay, so if you really want to succeed in trading the Forex market, if you've not got a strategy over the years, if you've not got a reliable strategy that works for you, I want to recommend one that I feel if you take out time to study it and to practice it and to backtest it and to keep on trading it over time, this strategy is going to work for you. This strategy should work for you. All right, so actually, to simplify your trading journey, I would want to recommend a strategy for you, and that strategy, the strategy is no other strategy than the demand and supply strategy. Okay, this is a strategy that I would recommend to you to trade if you really want to make progress in your trading career. This is not to say that there are no other strategies that you can actually trade to make money from the Forex market. There are many strategies. There are several strategies like the trend line strategy. You have indicator strategies. You have chart patterns strategy. You have many of them. Okay, you have a lot of them. Okay, many strategies in the Forex market. We cannot exhaust them. So, but today I just want you to, if you are yet to have a strategy that works for you, try to study the demand and supply strategy. I have a lot of videos on this YouTube channel that explains demand and supply strategy. Now, when you say demand actually means buying. So demand zone means buying zone or buy zone. Okay, buy zone. All right, and some persons also call it bullish order block. All right, why when you say supply zone, when you say supply zones, we are talking about sell zones or bearish order block, OB. All right, so this is what you should know. These two concepts can help you, can make a significant difference in your trading journey. All right, so trading demand and supply zones will actually simplify your trading career and could help you to become a profitable Forex trader if you apply good risk management and good trading psychology. Okay, good trading psychology. These two things would actually help you to trade any strategy, not only demand and supply zone, any strategy profitably. Having good risk management and good trading psychology will help you to trade any good strategy profitably. But today we are concentrating on demand and supply zones. All right, okay, so also another thing you need to note that if you want your demand, some of you have been trading demand and supply zones, but you are still not profitable, or you are not seeing the results that you actually desire to see. I want to add something else to you today. Trading demand and support can help your demand and supply zone to become more better and profitable is when you trade demand and supply zones, when you actually trade them, when you trade demand and supply zones with smart money concepts. All right, demand and supply zone, trading them with what? Smart money concepts. Smart money concepts. And in this YouTube channel, I have been exposing most of the smart money concepts, the vital and the most important smart money concepts to you is filled with this. Is actually you can actually see many of those smart money concepts principles in this YouTube channel. All right, so I will be linking several videos I've made on smart money concepts in relation to demand and supply zone that can give your trading, your demand and supply zone trading, a boost. All right, so what is a demand zone? This is a demand zone. This is basically a demand zone. All right, there are different types of demand zone. I've made a separate video on demand zone. So this is a supply zone. This is particularly a supply zone, a zone where we are looking to do what? To take a sell trade from. This is a supply zone. Okay, a zone that we are looking to take a sell trade from. All right, so, and a demand zone is a zone that we are looking to take. We are looking to take what? A buy trade from. A zone we are looking to take a buy trade from. That is a demand zone. So I have made several videos on this channel to explain them to you. Okay, so but how then? I want to enter into a particular description now. The particular topic I want to enter right now is how do you trade demand and supply zone with smart money concepts for higher trading success. How do you trade demand and supply zone? How do you combine demand and supply zone with smart money concepts in order to achieve higher probability? I'll be giving you 7 points, 7 tips that you can use to combine demand and supply zone. All right, 7 tips that you can use to combine demand and supply zones with smart money concepts in order to give you higher trading success. Okay, so the first tip that you need to know in order to combine demand and supply zones, combining it with smart money concepts, these tips to increase your win rate. Number one, you need to learn how to identify the market structure. I have always said it in this YouTube channel. It's very, very important. If you don't know about market structure, you will not make progress when as regarding demand and supply zone and also smart money concept. You need to know how to identify market structure, and I'll be putting I've made several videos on market structure, and I'll put the link to those videos in the description box of this video. Please try to view that. You need to pay the sacrifice in order if you want to make some significant progress in your trading career. The concepts I share with you for free on this channel, it took me years to learn them. All right, it took me years of mistakes, years of losing money on the forex market, years of emotional pain, years of emotional trauma, years of losses, years of sleepless nights in order to get these concepts I'm sharing with you for free. All right, so if you wouldn't take time to view these videos and learn them, then I don't know how else I can help you. All right, you need to help yourself, because I've already helped you by providing these concept free videos for you for free. And also, you come to my Telegram channel, you see how I trade these concepts. I trade them. I don't hide. I share my chart. I don't just give you signals to buy so and so at so and so price. No, I share my chart with you. Before I get into a trade, I share my chart analysis with you. And when I'm in the trade, I show you I'm in a trade. When I've finished it, when I get out of trade, I show you how I got out of the trade. So that shows you proof that these tips I share with you is not something I just formulated. These are things I have traded. These are things I have practiced over the years, and these are things that have been working for me, and these are things that I trade daily. There's no particular day I do not open my chart. All right, so first you need to know about market structure. All right, you need to know about market structure. Okay, so the second thing you need to learn about market structure. What is actually market structure? Market structure can be either bullish or bearish market structure. For a bullish market structure, the market is creating higher highs and higher low. This is higher highs, higher low, higher high, higher low, higher high, and higher low. This is a bullish market structure. Bullish market structure. I've made a detailed video on this, so try and view it. I'm just trying to I don't want to make this video too long. Now, for a bearish market structure, the market is making lower lows and lower highs. And how do we draw it? Now the market is making higher lower lows, lower highs. This is a lower low, lower low, lower high, lower low, lower high, lower low, lower high. This is a bearish bearish market structure. All right, so the next thing you need to know, if you want to make your demand and supply trading to be highly profitable and successful, and if you want to actually combine with smart money concept, you need to understand the concept of mitigation. You need to understand the concept of mitigation. Very, very important. I made a separate video on mitigation. All right, so what do you mean by mitigation? Mitigation means when a zone is created for price to come to the zone, and when a zone is created for price to come to that zone actually to trade. So when a zone price have not visited the zone, the zone is unmitigated. All right, let me show you in the chart what that means. Okay, here now price came to this zone. This is called a mitigated zone. A mitigated zone, that means price has come to that, return to that zone and buy from it. Now let's say price did this. All right, here now, as at this point now, this is an unmitigated zone. Price is yet to come, but when price, this is unmitigated. Okay, unmitigated zone. So when price comes to the zone and buys from the zone, it now becomes a mitigated zone. So you need to understand the concept of mitigation. This is for a bullish market structure. For a bearish market structure, you have something like this. Okay, so this is a mitigated zone. This is price did not come here. This is an unmitigated zone. Price did not really come to this zone, but price in this case now, price came to this zone and sell from it. So you have to know what mitigation is and unmitigation. So actually, when trading demand and supply zones, we actually trade unmitigated zones. We look for the nearest the most recent unmitigated zone in the line of our market structure. All right, we look for what? The most recent. All right, the most recent unmitigated. We look for the most recent unmitigated zone in line with the prevailing market structure. This is basically what we do while trading demand and supply zone with smart money concept. We actually look for the most recent. We look for the most recent unmitigated zone in line with the prevailing market structure. So when we get that unmitigated zone, we wait for price to come to the zone. Let's assume, as I drew initially, this is a bullish market structure. All right, this is a bullish market structure. Okay, so now this is an unmitigated zone, and this is the most recent unmitigated zone, and this is my demand zone. So what are we looking at? We want price to come to this zone, and we get some form of entry confirmations that will now signify an entry for us to buy. I have made a separate video on entry confirmations. All right, so you need to know when is the right time to get into the trade. When price comes to a zone, you don't just have to jump in. All right, when price comes into a zone, you don't just have to jump in. You need to wait. There are signals, there are signs, there are confluences that you look out for before you get into the zone, into the trade. And I've made video on that. I'm going to link in those videos in the description of this video for you to view them and learn that. All right, so you wait for some form of entry confirmations before you get into the trade. Now in my free Telegram channel, I show you the zones you are trading from, and when it is time to get into the zone, I give you some form of emoji telling you that price has come to the zone. Now you need to look for entry confirmations. All right, that is what I do. So when I post a chart analysis on the group, when price comes to what we call the POI, the point of interest, which is the zone, either a demand or supply zone, I give you an emoji showing you that price have come to that zone. It is now time to look for entry confirmations to get into the trade. All right, so what I said now, I've given you 3 points so far. I said the first thing is to identify the order flow market structure. The second thing, identify mitigated and unmitigated zones. And third thing I said, you need to mark the most recent unmitigated zone in your line of trade, in your choice time frame. You need to mark the most recent unmitigated zone in your choice time frame. Maybe your trading time frame could be H4. This is a 4-hour time frame. It could be 1 hour time frame. It could be 30 minutes time frame. It could be 15 minutes. time frame, it could be 5 minutes time frame, it could be 1 minute time frame. So you need to know, it depends on the type of trader you are. If you are a swing trader, you might want to be trading, maybe perhaps you are doing the D1 daily time frame, or maybe the H4 time frame. If you are or even the H1 or 1 hour time frame. If you are an intraday trader which open market trade the same day and try to close them the same day, you might be looking at trading the 15 minutes to the 1 minute time frame. All right, so maybe the 15 minutes to the 5 minute time frame. But if you're a scalper, you basically do the 1 minute time frame. If you're a scalper, that is someone who opens trades within minutes and close them within minutes, you may want to be doing the 1 minute time frame or 5 minutes time frame, as the case might be, depending on the volume of the market and how fast the market moves on that particular day. All right, the fifth thing now you need to do, if you are combining demand and supply zone with smart money concepts, you need to actually wait for price to come to the unmitigated zone. I've said that before. Wait for price to come to the unmitigated zone that you have marked. And when price comes to the unmitigated zone number 5, you need to look for some form of entry confirmations. All right, I've made separate video on entry confirmations. You need to look for what is called entry confirmations. Now, there are two types of entry confirmations. There are two ways you can get entry confirmations. Two ways. The first one, you can get entry confirmations on the same time frame, on a higher time frame. Let's say you are trading, you got your setup on H1. You saw the setup on H1. You can or H4. You can actually get your confirmation on the same H1 or H4 that you saw the setup. And how can you get the setup there? By looking for what we call the bullish or bearish engulfing candle. Okay, bullish or bearish engulfing candle, to me, is one way you can find entry confirmations on a demand and supply zone on the same time frame that you saw the setup, whether H4 or H1 or 30 minutes, as the case might be. All right, that is. But the second way you can find entry confirmation is by step down to a lower time frame. Maybe you are stepping down to like 5 minutes or 1 minute time frame. And when you step down to a lower time frame, you are basically looking for what is called a change of character. I've made a separate video on this YouTube channel. I'll be linking that video in the description of this video. So change of character, you're looking for change of character and return to order block before you now get into the trade. Before you enter the trade. Now let me help you to understand what I've just said. Now, for a bullish engulfing candle, you have the market you have a demand zone right here, and you want to get into the trade. Now, this if you're on the setup, if you're on the time frame setup, okay, if you're the time frame of your setup, all right, you look for a candle that broke which is that broke the last candle. When the price comes to the demand zone, the bullish engulf that take out a candle that take out another candle on the same zone, all right, on the same time frame. And when that happens, that signifies an entry on the same time frame. But if you are looking at refining the zone, refining some entry confirmations, stepping down to the higher time frame, you have something like this, a zone like in this nature, and perhaps this is your H1 time frame, and you allow price to come to the zone. When price comes to that zone, you step down to like 5 minutes or maybe 1 minute, as the case might be, 5 minutes time frame. Now, what are you looking for? You are looking for some change of character on that zone. All right, and now change of character means price breaking structure on the lower time frame. All right, in the line of your trades, in your expected line of your trade, and you're now waiting for what is called the return to order block. Price now return return to order block, return to order block, price comes back to mitigate the break of structure to the upside on the lower time frame, and now you get into the trade right there. All right, I've done detailed video on this. All right, so these are the two types of entry confirmations that you can actually use while trading. Now, where do you place? I'm going to show you on the chart a while, just for a minute, in some few minutes. Now, where do you place your stop loss? All right, you are placing your stop loss. This is a demand zone now. This setup, I actually shared this setup on I shared this setup on our free Telegram channel. This USD JPY today. I shared this setup today. Although price did not actually come to properly, price did not come properly to our price did not actually come properly into our zone. It just tapped into the zone on 30 minutes. All right, so most of us did not catch this trade, but some people also, some traders caught the trade. So I indicated that the market was going to come to mitigate this demand zone. So I actually was waiting for price to come further before I could enter. So I missed this trade. I didn't trade this, but I feel one or two small persons in the Telegram channel entered early, but I didn't. And I said it, I posted it on our Telegram channel. If you have not in our Telegram channel, please kindly enter. You'll find the link on the description box of this video, or you can also find the link in the profile section of this YouTube channel. So where do you place your stop loss? You are placing your stop loss just some few pips outside. Stop loss some few pips outside the zone. And where are you taking your take profit? Your take profit is actually here. This is your take profit. That's the distance from which the market started reversing in order to mitigate our zone. So this is our take profit. All right, these are our trading range, our take profit. All right, so that's the take profit. Okay, so that's the swing high. This is the swing high. Okay, that's the swing high. So that's our take profit in this. All right, so now let us see other example. Like for example, now you can see this is a bearish market structure. You can see the market creating lower lows and lower high. This is a bearish market structure. You can see this is what I mean by bearish market structure. All right, so let us see. This one is a bullish market structure. You can see the market creating higher highs and higher lows. Okay, this is how the market works. The market does not move in a straight line. The market moves in waves. Okay, the market moves in waves. If you don't understand it, not until you understand this concept, your trading career will not have a boost. Not until you understand the concept of market structure. It is very, very important. It is very, very important. It's almost impossible for you to become a good trader if you don't know what is called market structure. And in a layman's term, on a newbie's term, market structure is the same thing as trend. Okay, just the same thing as trend. All right, so just what's the trend of the market? Is it a bullish trend or a bearish trend? So in this case, you can see that this is a bullish market structure. The market is making higher highs and higher lows, breaking to the upside, and that is a bearish market structure. All right, so this is basically it. It's basically it for this video. All right, so I just thought that I should share this with you. Try and view I've made several videos on this YouTube channel on demand and supply trading. This is one of the best approach to the forex market. Demand and supply trading is one of the best approaches to the forex market. All right, very, very important strategy. This strategy can help you to make so much progress in your trading career. All right, so if you are yet to join our Telegram channel, I've asked you, please kindly join. It's for your own good, and you can also trade with me. There is no trade I take that I do not post in the Telegram channel. That is just a secret. There's no trade I take that I do not post in the Telegram channel for free. Okay, so, and also if you want me to mentor you, I have several persons I'm currently mentoring right now. If you want me to mentor you personally, one-on-one, all right, kindly chat me up. My contact detail is in the Telegram channel, okay, of the Telegram channel. And this link to the Telegram channel is in the description box of this YouTube channel. All right, so I'll train you, I'll mentor you until you become a profitable forex trader. Chat me up and I'll train you. I run one-on-one mentorship program on forex trading, And why I do one-on-one mentorship training is because I believe that every individual has their learning curve, separate learning curve. So I stoop down to your level until and work with you at your own pace, not at my own pace, at your own pace until you become good in this business. I am a good trader, so I make proud to say that I'm a good trader, and I have a lot to teach you because I've paid my dues. I've taken years to learn to learn this skill, okay, and I can help you. I've been where you are right now, the stage at which you are right now. I know your struggles. I've passed through all of that, and I know the best way to help you to overcome the struggles and to help you to become profitable. All right, so till I come your way next time, do have a wonderful and a blissful day. Bye.